Hi there, welcome back to our channel. If you're new here, I'm Megan, a semi-professional real estate investor and finance broker. So today we're going to be diving into planning out your first few rental properties, investment properties. So whether you're looking to generate additional income, build long-term wealth, or just diversify the investment portfolio that you're building, this video is going to be for you. Make sure you hit that subscribe button and also hit the bell so you get notified of any of the videos that we are creating all around real estate, finance, and building businesses. Real estate investing can seem really overwhelming and honestly scary at times, especially when you're getting started and you really don't know what you're in for. I still remember when I was 23 and I told my family that I was going to be moving to a new state with where my fiance was, and we were going to be buying for our first house a 2-unit. I remember the women in my family, my grandmother, aunt, mother, cousin, all of them cornering me in the laundry room, pointing at me, swearing, telling me I was an idiot and that I was doing one of the riskiest things of my life. But good thing I didn't listen to them, because purchasing and owning real estate has been one of the best decisions of my professional career, and it's helped me in my other businesses. What we're going to do is we're going to cover today different types of investment properties. We're going to talk about roughly how they generate income, financing options for investment properties, the key things to keep in mind and factor when you're looking at purchasing your first investment properties, how to avoid and try to stay away from some of the risks, and then we'll walk through a step-by-step guide on just how to purchase that first investment property. So let's get started. Since this is a beginner guide, I'm going to go over the high-level buckets, and there really are 3 buckets. So there are residential real estate that you rent out, there's commercial, and then there's land. And each type has its own benefits and income potential. First, let's talk about the residential real estate. So that's usually your single family homes, condos, all the way up to 4-family homes. And I always thought, and I heard that purchasing, your 2 units and your 4 units is where you want it to be, that it produces more income, and which is absolutely correct, but there still is room, and we love single family properties. You can, if you want low key, low maintenance, your single family homes will rent out to tenants that are going to be longer term tenants. If you want to do Airbnb, your single family homes are going to be better. They're also easier to get started with in the financing space. The second type of property that you want to look at, or that second bucket, is going to be your commercial properties, which is like opening up Pandora's box, if I'm being honest. And if this is really your first time investing, I would stick to residential. This category includes office buildings, warehouses, industrial. There are so many buckets within commercial. So these are typically properties that are leased or rented out to businesses, and they can return higher yields, more long-term tenants, but I would still recommend the residential before jumping into commercial. Then there's land, which is undeveloped land that can be a long-term investment strategy, and they can appreciate in time when you sell them to someone who's looking to build. I think land can be a great investment as well for first-time purchases, as long as you're okay waiting to purchase and get the return later. So now let's talk about some of those financing options for investment properties. So you've got traditional mortgages. So mortgages that go on your personal credit report, like a home loan. So when you do a traditional mortgage, that means because it's going to be on your credit report, you also have to qualify as an individual. They really don't take the property into consideration and what income it's going to produce. It's all based on the income that you produce from your job against the debts that you have. You can do that. You're going to be able to get some good rates. It's a little more of a strenuous process in underwriting, but if you can't, then the next grouping is what I call investor DSCR loans, debt service ratio loans. And these are what I consider one of the best loans for investors who are being told that they don't have the DTI, or debt to income ratio, to qualify to purchase another investment property. So this could be your third, fourth, or fifth property, or it could be your first. And what happens with these loans is that the banks don't look at your personal debt and your personal income. They look at the property and what type of rent the property is either receiving or will receive, which is really nice. And they are an easier loan to go through. You'll need more money down, but you will be able to get through the process much, much faster. And a lot of more experienced investors like these loans for that reason. You can also do some of them with renovations. So just something to keep in mind. And then the next group of loans when you're investing in real estate, if you can, I would stay away from them in the beginning, which is more your hard money loans or private lenders. And it's because there really isn't much regulations around them. So it's easier to be taken advantage of. If you don't have any money to get started, that could be where you need to go to be able to get the money to purchase your first place, which I totally understand. And I don't think there's anything wrong with hard money and private money. I think there's room for all of it. Just piece of advice that I like to give people when they are first buying. Now, let's talk about the conditions in choosing a property. So choosing the right property is crucial for especially that first property. Now, don't have analysis paralysis and not make a decision, but not enough people plan out their whole process, how they're going to finance it, and they just focus on the property. But when you are focusing on the property, you want to think about things like, are you going to be able to go to the property? Because that first one, you want to be hands-on, so you know what you want your business to look like. Now let's start talking about choosing your rental, your investment property, and the importance of the different types of things that you want to consider when you're picking out a property. Buying those first few deals, I always recommend that you are hands-on, that it's something that's tangible to you because you're realizing how you want your business to be run, how you want it to function if you're not, which you won't always want to be the one who's handling everything. Start thinking about putting your plan together. And when I say plan, that doesn't just mean the property. What kind of finances do you have and what do you need? What location do you want it to be in? So, in location in your city. So I live in Erie, Pennsylvania. We were purchasing in this one area near the hospital, for example, because it was all in a lot of our properties are in close proximity to each other. Think about the property condition, because if you buy properties that need updates, you may need to do them at first, or you're going to need to do them in the next 5 years and come up with that cash. How about appreciation? Like in our area, the city does not appreciate as much as the school districts where the properties are higher value. So conduct your research, do due diligence, think about the impact of all these things. Find a strong mortgage broker and real estate broker, someone who has experience. Consult with the right professionals on this piece of it, because it'll make everything go so much smoother afterwards. You won't avoid all the mistakes, but you'll avoid a good chunk of them. The next area that I wanted to go over was, what are some of the risks or things that could go wrong, or the problems that can come up, and what can you do to avoid them? Every investment comes with risk, so you can never avoid all of them. You're gonna have vacancies. You're gonna get a bad tenant you're gonna have to kick out at some point. But here are some strategies to help mitigate those risks. Make sure you get the right insurance. You want to make sure there's insurance where if there is a fire, do you get rent while the property is getting repaired and corrected? Diversify. Don't just buy single families. Buy a single family and a 2-unit to test out the different properties that you like. Make sure you have a cushion. So we didn't live off of the extra money we made on our rentals. We put it back into our account and did upgrades as we went along. The last one, let's just kind of go through the high level steps of where to start, all the way from starting your planning to closing on that property. So the pre-purchase planning, once again, I can't stress enough that not enough people do this. They get excited about the house. They meet with the agent. They start looking at places and they haven't really thought about it. They haven't talked to that mortgage broker yet. So make sure you do that pre-purchase planning. So when you go talk to someone, you tell them what your plan is so that they can also help you with a strategy. Then start doing the property search and evaluating properties. You can also, look online, but use a professional who will help you, who will help negotiate with you, know the formulas you're going to use based on the type of investment strategy that you're going in at. Make sure you stick to the numbers that your investment strategy has to stay within so you don't sell yourself short or make things too tight for yourself afterwards. Get inspections at least in the beginning until you know what you're looking for in properties. Make sure you apply for the loans on time so you don't lose your deposits. So that you go through that process and know the type of financing you're going to need up until you close on the deal and acquire the property. And keep really good paperwork so that we always keep binders. So keep a binder of what's going on. It'll make it easier when you go to sell or when somebody needs some type of documentation. But if you follow that roadmap, you will be in a property. Don't let yourself get caught up in fear or I don't know, or ooh, there's a little problem. Just keep taking action. And, I always say investing is one of the most powerful ways to build wealth, generate additional income, maybe have it be a way that you'll eventually leave your job. But by understanding some of the differences that we went over in this video, you will be on your way to having a successful experience investing in real estate with lower risks and connecting with the right people. So if you're ready to take the next step in your real estate investment journey, don't hesitate to reach out to my team or I. We're here to help you navigate this whole process, connect you with the right people, and just help you make the best choice for your financial future. Schedule a time to talk with us, and don't forget to subscribe if you found this video useful and helpful in your journey. Make sure you subscribe to the channel so that you keep getting notifications for more tips and strategies for your real estate investment, business building experience as you build up the real estate portfolio and business that you've always wanted. Otherwise, thanks for watching. I'll see you guys in the next video.